This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC Plus is set to consider whether to make additional oil supply cuts when the group meets later this month. 3 OPEC Plus sources told Reuters after prices dropped by almost 20% since late September. Oil has slid to around $79 a barrel for Brent crude from a 2023 high in September near $98. Concern about demand and a possible surplus next year has pressured prices, despite support from the OPEC Plus cuts and conflict in the Middle East. Saudi Arabia, Russia and other members of OPEC Plus have already pledged total oil output cuts of 5.16 million barrels per day, or about 5% of daily global demand, in a series of steps that started in late 2022. The cuts include 3.66 million barrels of oil per day by OPEC Plus and additional voluntary cuts by Saudi Arabia and Russia.
Oil prices jumped more than 4% on Friday, rebounding from a 4-month low hit in the previous session, as investors who had taken short positions took profits and while U.S. sanctions on some Russian oil shippers lent support. Brent crude futures settled up $3.19, or about 4.1%, at $80.61 a barrel, while West Texas Intermediate crude, WTI, rose $2.99, or 4.1%, at $75.89. You're getting a natural profit taking rebound and short covering, to a degree, said John Kilduff, partner at Again Capital LLC in New York.
Moving on to the top news in the energy sector.
Russia has lifted restrictions on gasoline exports, the Energy Ministry said on Friday, after scrapping most restrictions on exports of diesel last month, saying there was a surplus of supply while wholesale prices had declined. It said it could reimpose export bans if necessary, adding that stocks of gasoline had risen to around 2 million metric tons over the past 2 months, while maintaining high volumes of oil refining. Saturation of the domestic market has been ensured and a surplus in the supply of motor gasoline has been created, including in the exchange sales channel, the ministry said on Friday.
3 oil tankers, newly sanctioned by Washington, regularly shipped Sokol crude from Russia's Far East to Indian Oil Corp, the country's top refiner, in recent months, according to ship tracking data from LSEG, Kepler and trade sources. The U.S. on Thursday imposed sanctions on maritime companies and vessels for shipping Russian oil sold above the Group of Seven's price cap, as Washington seeks to close loopholes in the mechanism designed to punish Moscow for its war in Ukraine. The Liberian-flagged ships hit with sanctions are the Kazan, Likovsky Prospect and NS Century, according to the Treasury Department. Next, we have the top news in metal markets. The European Union should impose broader import bans on Russian aluminium, industry group European Aluminium said on Friday, arguing that the current proposal to ban certain products would have only a limited impact. EU members are currently debating a European Commission proposal for a 12th package of sanctions set to include import bans for diamonds and liquefied propane and measures designed to tighten implementation of a price cap on Russian oil. It also includes bans on aluminium wires, tubes and pipes, but these only make up 12% of EU aluminium imports from Russia, European Aluminium said in a statement.
Copper prices edged up on Friday, boosted by a weak dollar, fresh support by China for its troubled property sector and worries about a potential tightening of supply from mines. 3-month copper on the London Metal Exchange, LME, was up 0.7% at $8,274 a metric ton at 1700 GMT after retreating from a 6-week high in the previous session. US COMEX copper futures gained 0.6% to $3.72 a lb. We're waiting to see what happens in Panama. There's no doubt that on the mining side of things, it's pretty tight, Dan Smith, head of research at Amalgamated Metal Trading, said.
We will now look at the top news in the agricultural sector.
Indian farmers have planted wheat on 8.6 million hectares since October 1st, when the current sowing season began, down nearly 5.5% from a year earlier, sources said on Friday. The Ministry of Agriculture and Farmers' Welfare, which will keep updating the provisional crop sowing figures as it gathers more information from state governments, expects wheat area to go up in the next few weeks, the sources said. The planting figures are also subject to revision depending on weather conditions. Wheat planting is lower due to a delayed rice harvest, the sources said. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.